Let's get you up to speed on today's market action with just about an hour to go until the closing bell. Dow actually now in positive territory, up just around 29 points, recovering from the losses earlier in the session. Taking a look at the S&P, that's still in the red, off just about 0.4%, but you can see in the intraday chart, well off the lows of the session as well. NASDAQ 100 still remains in the red. The worst performer of the three averages, off just over 1%. Some of those big tech names leading today's decline. We'll take a look at that here in just a second. But let's first take a look at the bond market. Yields pushing higher once again. The 2-year yield, which is obviously the most rate sensitive yield, that's hitting the highest levels that we've seen since July 2007. Taking a look at the 10-year yield, pushing higher once again, up 7 basis points to 413. Taking a look at the U.S. dollar index, that's pushing higher once again, just below 113. I also want to pull up the pound here as we talk about the news that we got from overseas. The Bank of England raising rates by 75 basis points. Also the warning of a recession, the stark warning there from the Bank of England. That's pushing the dollar lower once again, pushing the pound lower against the dollar. And you can see that reflected in the intraday chart. Taking a look at some of the action that we're seeing on a sector basis, let's start with the NASDAQ 100 because, again, some of those larger cap tech names leading today's declines. You're looking at Apple off just over 3%, as well as Alphabet, Google there. Amazon lower for the 7th trading day in a row. Microsoft off just around 1.6%. Taking a look at the Dow Industrials, the largest decliners there, obviously the same story there with the larger cap tech names, but we are seeing some of those industrial names, the value stocks holding on to gains. Taking a look at Honeywell, for example, up just around 2.6% on an intraday basis. Boeing leading the way there, up just about 7%. Sector action, taking a look at all 11 of the S&P sectors. Energy, industrials leading the way. Technology, communications lagging in today's action. The XLK technology ETF off just over 2%. All right, despite another rate hike from the Fed, mortgage rates having slipped below 7% again. That's according to Freddie Mac. The 30-year fixed rate mortgage averaged 6.95%. That's down from last week's 7.08%. For context, though, it's still more than double from just a year ago when it averaged 3.09%. Freddie Mac's chief economist is saying that, quote, unsure buyers and navigating an unpredictable landscape keeps demand declining, while other potential buyers remain sidelined from an affordability standpoint. Worth noting, mortgage rates track the yield on the 10-year Treasury note versus mirroring the Fed's interest rate hikes, the 10-year ticking up since the Fed's announcement, so mortgage rates may follow suit in the coming days.